Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Okay, big news today. Okay, no, it's not the Fed minutes. Those are backward looking. We don't care about the Fed minutes. It's not QE time. Okay, Bessent, Treasury Secretary, comes out and says that the Treasury will start buying long-term bonds. Okay, not the Fed, the Treasury. Okay, so it's a melange. It's crazy what's going on. Okay, the Fed wants to signal one thing, and Bessent wants the Trump administration wants to signal the other. Okay, we'll get to all the implications because there are a lot of implications and a lot of signals that are being sent today. It's a very important day. But first, let's talk about the technical picture, guys. We're still bullish. Okay, the market was basically flat today. General stocks don't know how to react and not QE. But other sectors reacted very, very strongly because the implications are huge for other sectors. Okay, we'll get into it. But the technical picture is bullish. Come on, guys. I was hoping we'd get another down move. Can we have two down moves get to this level here? That would have been great. Okay, maybe we don't get there. I don't know. But if we do, it'd be fantastic. Okay, but so far, still bullish. I can bring in the moving averages. Everything is above the 50. The 20, except underneath the 10. Okay, who cares? That's too short term to care about. But really, you don't need the moving averages here. You broke out and you're consolidating at the breakout point. I hope it goes to this break. I hope it retest the breakout point before going higher, but you never know. Okay, what does the sentiment tell us? We're at greed, right at the board of neutral and greed, although the momentum is fearful. But look at the stock price breath. We said it. It's coming back. It was extreme fear. Now it's at greed. This is fantastic. The market is expanding. Okay. And look, not a lot of calls and a lot of puts were being bought to bring it down to neutral. We're not even at greed yet, which is very, very good. I was expecting people to pile onto the calls. We'll see what happens. It's a 5-day average, so it's delayed. But let's see what happens. Okay, I'm delighted to know that not a lot of people are piling into the calls. Maybe they got destroyed after yesterday's move. Who knows? We'll have to wait and see. But so far, this is bullish. Okay, so let's get to the big news, not QE. So what happened today? Yields pull back from multi-year highs after Treasury Department says it will double government debt repurchase size. Okay, so long-term yields pulled back, the 30-year Treasury, the 10-year Treasury. Okay, but this is what made the market basically pause. Okay, Tony Miano said, while the announcement may provide short-term relief, we do not believe it fundamentally changes the outlook for long-term yields. This is good for us because I believe it does. Okay, but let's see what happens. Okay, the implications for this are huge. Okay, first off, let's go to the Fed Watch tool before we get to the market. Let's go to the Fed Watch tool and see on September, basically no hike is priced in. If it stays at 67%, this is enough. This is the minimum threshold for the Fed to follow the market's advice, because this is the market participants' view of what's to come. So in the September meeting, if it stays like this, they're not going to do anything, okay? But all of December, let's see, has it changed? It's pretty much the same. 35% no hike. It was at 10%, and 44% hike. They think they're going to hike in December. Not even October, I don't think. Nope. October, stand pat. So basically, the first hike is coming in December. I don't think so. Yeah, I just don't think so. But, that's how the market is positioned. And you know what we think? We think that and by the end of the year, this is going to recycle to 67% at least. No hike. Okay, flat, nothing. Okay, so that's what happened with the Fed Watch tool. So nothing really big, but let's look at the US 10-year. Okay, let's look at what happened to the market. Right at the Rubicon, Trump and Bessent come in, boom, to tank it. It's still on the uptrend. It's still at highs. It was at 4.72, but now it's 4.63. A big drop of 1.51%. So you're right there at the Rubicon, okay? And this is because all of this is because of the war. Inflation is being bid up because of the war. And Trump and his administration, Bessent, is trying to do everything possible, besides doing the right thing and getting out of the war, everything possible to stop the effects of rising inflation expectations. And that is, stepping into the long-term market. Okay, let's look at the TLT, the long bond. Okay, stepping into the long bond market now. It was at this level here, 80.85 on the TLT is it's the forever low. It never went lower than this. Okay, we'll get to it. But look at today. It's up 1.6%. So that's a lot for a bond move. But the market, again, But the gentleman was saying, what's his name, Tim Maori, whatever it was, it's still the downtrend. There's still a downtrend. They still don't think that he's going to come out of it yet. Okay, so just to show you guys here, let's go to the monthly chart of the TLT. Okay, so let me do something so you guys can see it here. Okay, look at since inception, it's touched the bottom level of this bottom line, which is 80.5. It did touch it on the monthly chart. Okay, so we're at it's forever lows. Like, it's never been lower than 80.85. Okay, so we're really at highs. Never, meaning since 2003. Okay, for the past, what is it, 23 years? This is a 23-year low in TLT or high in yields. So this is a Rubicon. It goes lower, it's going to hurt the market. So something had to be done. Bessent comes in, instead of like stopping the war, which that's what should have been done. He's trying to do this by intervening into the market and buying more long-term bonds to manipulate the market. Okay. The manipulation of the market is real, okay? Because to me, this is like beginning stages of YCC, yield curve control. Okay. The Fed, I thought it would be the Fed, but it's not the Fed. It's the Trump administration. They have so much debt, okay, that they have to do something. We have like 40 trillion now. We crossed the 40 trillion mark. Okay, so you can't afford high rates. So they're going to do everything possible, machinations, enter into the game, trying to manipulate the market to keep rates low, to not go over the 5% yield on the US Treasury, on the US 10-year. Okay, so they're going to do everything possible. This is like mini yield curve control on the long end. Okay, so it's just the beginning stages. This is how governments operate. Okay, they never do the right thing. They always try to do everything possible to, put your finger in the dam as the dam is like breaking, instead of like, stop, constructing a more powerful dam, okay, and stopping the war, because that's what's causing the inflation. But what does oil say on all this? Oil is still stuck at the 85 level. Okay, it's still pretty high. US oil. Oh, that's a monthly chart. Okay, wait. Let's go to the day. Still stuck in this 85 level. Not the 100, but stuck at the 85 level. Okay? If the war ceases, or if some kind of mitigating factors come, because he did say that he's trying to like work out a deal to like, stealth support the opening of the Strait of Hormuz around the Gulf of Oman, around Oman. Okay, that remains to be seen. Who knows? But the fact that oil is still low with the with the Strait of Hormuz still closed, tells you a lot. A lot of mitigating factors are happening. Okay, that's what we're saying. Okay, a lot of mitigating factors are happening. So we have SPY not really reacting to this not QE. Okay, TLT reacting, but it's still in a downtrend. But what really is reacting is the gold and precious metals market. Huge. When you have a hint, just a slight hint of yield curve control, gold is going to rip, because that means negative rates eventually. Okay, so gold ripped 4%, almost $200, $190, and probably continue to rise. Okay, and this is telling because it's been destroyed. It was so negative here. We were buying on this breakdown, right on this candle. We bought a lot, and we continue to buy on this. We had a structured buying program. Every week we would buy something starting on June 10th. And we wait. It's going to take months before this plays out. And I think the table has switched with this news coming out, stealth yield curve control, the beginnings of it, plus China buying, plus Russia buying, plus the BRICS buying. It's just, I don't know why you would sell your gold. I don't know why this move happened. It's just crazy to me. But to me, the fundamentals are so strong for the gold market. And you're seeing it in the silver market as well. Not as much, because this is going to be a laggard. Because it's also an industrial metal. So if the economy is slowing down, this might not work. So this, being silver, might not make as big a move, but I really like how gold is behaving in this move, and even the miners today. Look at this move in the miners in the past. Since August 4th, it was at 75. Now they're almost at 100. Okay, that's like a 33% move in like, 2 weeks? It's from beginning of August 4th till August 19th. That's 2 weeks. That's crazy. That's a crazy move, a 33% move, because they're sensing it. Okay, this is a washout. You get these, every move up in gold, you will get a 20 to 30% drop in a bull market, in a real bull market. Okay, this is not it. Okay, this is not it. That's not it. I mean, a real drop, which is a buying opportunity. It happens rarely. Look, after this bull run since 2024. It only happened in 2026. So 2 years later, okay, was this correction. We're going to go up again, and this move is usually going to be more explosive than the previous one. Okay, we could get to, I don't know, gold 6,000, okay, let's say. Who knows? Gold 6,000, very, very possible over time. Okay, it's not going to be a 5 days, 6,000. No, over time, because the fundamentals aren't changing. The administration will do everything possible to avoid doing the right thing. Okay, and with $40 trillion in debt, they do have to do. They do have to have. They don't have to, but they will implement some type of yield curve control instead of doing the right thing and taking their medicine. Okay, which is, stop spending so much, guys. Okay, and the Fed will capitulate. You can't have a war between the Fed and Trump and the administration. It'll just tank everything. The credibility of America will go down. So, go down even more than it already is. So yeah, I don't see the government or the Fed doing the quote unquote right thing. That's why you should have gold. And in a secular bull market in gold, you look for chances to buy. This was your opportunity. Okay, we were buying on this crush downward here when the charts look completely crappy. See, underneath the 200-day, we bought more. Still, we touched the 200-day, and that's very, very nice. Okay, if we go above it, very, very bullish. Okay, and we have the fundamental impetus, the fundamental rocket fuel to do that. It's not going to be a straight line. Okay, it's going to be ups and downs, but more ups than downs. Okay, so that's what I like to see. GDXJ is going to be crazy. Okay, it went from 115 down to 70. Huge drop. Okay, 40%, about 30 to 40%, and now it's coming back in 2 days. It's making up more than half the drop. Okay, so that's a very, very powerful move. Okay, and today Bitcoin also made a move. Bitcoin up, although I still hate it. I don't really like it. Okay, it's still it's a good move, but downtrend, and I don't like the fundamentals of it. Okay, so but I do like the fundamentals of gold. Okay, so the one market that was beaten down, shot down in April, and now it's riding high in May, as good old Frank Sinatra would say. So SPY, let's reiterate, not QE, but really QE. The market doesn't really know how to digest it. Is it good or is it bad? We don't know. The tech sector, not liking it. SMH down. Okay, QQQ down as well, but still hovering at highs. Okay, I suspect like this move will be seen as bullish over time. Bullish meaning that stocks will go up. It doesn't mean it's bullish the economy. Okay, but that's a tale for another time. Something to unpackage later. But so far, not QE. We're seeing gold really moving. We're seeing the market not yet trusting this move. So that's it. Let's see going forward how the market reacts. It's very, very important. Okay, so that's it, guys. Let's see what happens. Okay, we did some trades today. Remember we talked about Wolf. Okay, we'll talk about that tomorrow and how it played out, because we did an earnings trade and they had earnings today. So we'll talk about that tomorrow because it's getting a bit long. But let's just suffice to say that this move, this not QE, is really signaling a very powerful move and tipping the cards of what the Fed and the market, not the market, but the Trump administration will do going forward. Okay, so that's it, guys. Later.